So as you sort of look back almost at the last decade, could you just reflect for us on saying what have you guys really done on the ground to make that revolution happen?
So India has gone from solving for low-cost payment to a very trusted payment. And Soundbox, which is very ubiquitous, also brought a revenue model of another kind. So revolution started with QR and extended by UPI, where linking of a bank account became phenomenally easy. So I'm going to call merchants who are merchants. I'm not talking about person-to-person payment that you can do to a merchant. That number we believe could be 100 million in this country.
Aspect number 2 that financial services have really created a dent in is payments. Now, obviously, that is in conjunction with the public infrastructure, wherein a lot of foresighted help has come from the government, and our fintechs have actually built solutions in and around them. So hence you have seen a lot of large companies being built around in India. And I think a lot of them will actually go ahead and build more solutions that are more comprehensive and personalized. So that would be aspect number 2.
When we look back again at the last decade or so, there have been enough examples which show that fintechs have been able to deliver a 10x better experience for end users. So would love to understand this from your vantage point. How have you seen these journeys evolve and what's led to that?
I remember when we started out, real-time onboarding was a distant dream. I think the big unlock first emerged as a green shoot in around 2016 when the India stack started to first come to life.
When I started PayU back in 2011 as a payment gateway, the total population who would transact online on a merchant to buy commerce was probably a few million. Today in 2023, that number has easily crossed 150 million plus every month.
And if I double click a little bit on that theme of enablement, you spoke about it as fintech as partner, where fintechs have really helped improve internal workflows, improve internal efficiencies. Could you talk a little bit more about the impact you've seen such enabling partnerships have on the bank?
So today, for example, if I have to look at my FRM process or AML process or transaction monitoring process, or the whole digital lending digitization that I spoke about earlier. So all of these, we have clearly taken a decision of buy versus build, right? And this is where we've seen that there is such immense talent, amongst available in the market where, players have actually created very futuristic solutions. They've created solutions which are more or less in line with what a bank or a regulated entity would require. So there is very little customization which is left to be decided, to be made.
I think we started with fintechs coming up with quote unquote cool end-to-end solutions. Also, I think we now have very niche players who solve very sharp but specific problems. And because they work on very focused areas, they build some competitive advantages.
I look at India as the fintech factory for the world. A lot of the ideas that will get germinated here would actually find its feet all across the world, and it's going to be an exciting decade or two for as far as India fintech action is concerned.
There have been enough examples which show that fintechs have been able to deliver a 10x better experience for end users. So would love to understand this from your vantage point of working much more closely in the industry. How have you seen these journeys evolve and what's led to that?
I think when I started, let's take a macro view, right? When I started PayU back in 2011 as a payment gateway, the total population who would transact online on a merchant to buy commerce was probably a few million. Today in 2023, that number has easily crossed 150 million plus every month. People purchasing commerce digitally. Right? This explosion in population, this explosion in paying capacity of the customer has led to an opportunity where you can design a product for just few million customers and achieve the scale, profitability, revenue you need to justify building a product for a small number of customers.
I remember when we started out, real-time onboarding was a distant dream. Right? The question was not how do I do this instantly. The question was how do I actually minimize the number of steps and minimize the pain involved in being onboarded as a customer for any kind of financial or credit product. I think the big unlock first emerged as a green shoot in around 2016 when the India stack started to first come to life.
Yeah.
And interestingly enough, we actually built as Capital Float at the time the first full end-to-end instant lending experience on the India stack. It was a mobile-based loan to a Kirana store owner that happened within 90 seconds on their phone and utilized all the key elements of the stack. So eKYC, e-sign, UPI, as well as the early kind of proto version of account aggregator that pulled data on the back end from various sources, right? And this was a huge breakthrough in the industry. I mean, we were giddy with excitement about doing this, right? But then, interesting enough, it took another, I would say, 6 years to fully see that commercially viable at scale.
I think there are 3 or 4 opportunities that have opened up in the recent past, predominantly again because the older modes of how they were served has actually lost sheen a little bit with the kind of pace that we are looking at in terms of technology growth. Foremost in my mind is insurance, number 1. Number 2 in my mind is a bit of wealth management. In the third thing, I think a big push is happening as we speak in SMEs around compliance in general. I think the entire financial services digitization journey that pretty much started about 15 years back with the advent of this century is what the fintechs brought in. That's, I would say, aspect number 1. Aspect number 2 that financial services have really created a dent in is payments. Now, obviously, that is in conjunction with the public infrastructure, wherein a lot of foresighted help has come from the government, and our fintechs have actually built solutions in and around them. So hence you have seen a lot of large companies being built around in India. And I think a lot of them will actually go ahead and build more solutions that are more comprehensive and personalized. So that will be aspect number 2. I think India has a great chance to actually be the shining light when it comes to solving for all 3, because I can't think of a single country that has actually built all 3 simultaneously. What has happened in India is that the first 2 has really been struck off. If the third can be struck off, we would really strike glory. I think fintechs can be helpful in 2 ways. One is they can be a thin stack for acquisition, wherein the traditional financing houses actually do the financing, and fintechs pretty much make the ecosystem available. And there can be a commercial sharing model which makes it viable for both.
The single most revolutionary movement that happened in this country was when a merchant discovered QR and customer accepted that I can scan this QR to make a payment. So India has gone from solving for low-cost payment to a very trusted payment. And Soundbox, which is very ubiquitous, also brought a revenue model of another kind. And I think the world will take hardware of payments from India. I'm totally comfortable saying it.
One of the things technology is able to do, and we've been able to push the needle, is just be better at explaining and expectation setting as to how this product is really going to work for you.
We've had a situation where it was only fintech, and we started out, India today is probably in the second wave, or maybe 10 years into the whole fintech action is. What started out as competition in some form, and also kind of being regulatorily also prescribed in a way that rather than competing, how do you co-opt, right? So the regulator is very clear in saying that if you want to be touching the customer, if you want to be somebody who wants to actually own the customer, come be regulated, right? So if you're not doing that, then you kind of are on the distribution side of the business, because the manufacturing requires a license, right? So therefore, I think in the way the things have evolved, we are no longer looking at just an upstart to be a fintech, right? So that universe has expanded. You could have a large NBFC saying, how do I reimagine, new to credit? So that is a fintech execution at play. You could reimagine how, affordability options get enabled on a large e-commerce sort of, location. That becomes a fintech, in its own right. So therefore, the universe of fintech action is kind of expanded beyond how we kind of think about it, saying it's an upstart that is going through its, sort of growth curve. And that is really exciting, because we now have in India a handful of banks that are saying we are fintech friendly, we want to innovate, we want to co-create, we want to take products into the market.
Creating operational efficiencies as well as creating financial efficiencies. So, whenever we have looked at some of these partnerships for internal digitization, right? So today, for example, if I have to look at my FRM process or AML process or transaction monitoring process, or the whole digital lending digitization that I spoke about earlier. So all of these, we have clearly taken a decision of buy versus bet, right? And this is where we've seen that there is such immense talent, amongst available in the market, where players have actually created very futuristic solutions. They've created solutions which are more or less in line with what a bank or a regulated entity would require. So there is very little customization which is left to be to be made.
The 4E framework that we use when we talk about where fintechs have added value in the financial services space in India. And one of those E's is the enablement axis, which is how fintechs have enabled financial services institutions, BFSI companies, banks, to really drive in a lot of improvement in processes, efficiency, and so on. So would love to understand, when you work with fintechs as the client side, on the data side, on the workflow side, how would you see the journey of fintech into bank partnerships over the last 10 years? Like, how has that evolved, and where do you see really the value add?
So from our perspective, I think this space has evolved quite dramatically. I think we started with fintechs coming up with quote unquote cool end-to-end solutions, right? Like better lending platforms or better payment platforms, which banks would just pick up and integrate into their systems. I think we moved from there, wherein we have some folks who continued on that journey and have become fairly successful. But also, I think we now have very niche players who solve very sharp but specific problems. And because they work on very focused areas, they build some competitive advantages. So as an example, there are people who work on data, getting specific type of data for financial institutions. Or there are people who do very specific types of things, maybe around reading documents or solving a very small part of the journey, but doing it in a kind of a outstanding way, distinctive way, which a financial institution themselves will never be able to get to. And I think we work with a large number of players of that nature, and those kind of partnerships have really scaled for us because therein, the fintech partner is getting to us a very sharp capability, which, as an example, it'll be very difficult for us to invest and build a differentiated solution there, which means it has to work for a partnership of this nature to succeed. Our core belief is that it has to work for the customer, it has to work for our partner, it has to work for us, it has to work for all three. If it doesn't work for one of the three, then it's unlikely to be a long-lasting, sustainable partnership. So that is kind of item number one. Number two is that genuinely we have to build a product which is 1 + 1 is more than 2. Because if 1 + 1 is only equal to 2, then it is easy to replicate, or it is easy for it to come off. Customers won't see value in it. So that building that 1 + 1 greater than 2 is the second part of this entire puzzle. That typically happens in the fashion where because the partner has access to customers and some data about them, we are able to offer, let's say, a loan or a credit card, which we would otherwise not have been able to because we don't know that much of. That's one great example, right? But there could be many other ways in which this 1 + 1 greater than 2 can happen. But that is again at the core. The third is the simplicity and the ease of customer experience. So we have to build integrated journeys, which from a customer's perspective are simple, seamless, and all the risk and compliance and all the other layers operate in the background. They all operate, but they operate in the background so that the customer doesn't see them. So these three things, if we bring together, we have typically seen partnerships really flourish.
Please visit bottomline.elevationcapital.com. Here we have compiled all the data, interview notes, and views that have all gone into building this report. We hope the entire ecosystem is able to benefit from this compendium as much as we have.